Douglas Borthwick, Chief Business Officer at INX. Always a pleasure to have you here on Real Vision. Always enjoy talking about the merger of the digital asset space and the traditional financial services space with you. Welcome back, Douglas.
Ash, thank you very much for having me.
Douglas, you've been on Real Vision a number of times. You're one of our favorite guests to help people understand what you guys are doing in this space and potentially some of the broader themes, the merger of the digital asset space and the traditional finance space. Let's start at the very beginning. For people who haven't seen any of our prior conversations, tell us a little bit about your journey and how you got interested in digital assets.
Sure, thank you. My background really was very traditional. Undergrad, business school, Morgan Stanley, 10 years in foreign exchange derivative trading, where we didn't look at companies, we looked at countries, and we kind of thought about, what countries should be devalued. And we did that for a number of years, about 10 years. Then I ran proprietary trading at Merrill Lynch. I went to Standard Chartered to run the Latin America trading business. And then I went to a company called TPI-CAP, an interdealer broker, where I worked on a company called Chapdelaine FX that I started that was an FX ECN, allowing people to buy and sell currencies amongst themselves electronically. And then I heard about something really interesting. I heard there was a fellow in Tel Aviv that wanted to create something called a security token, which was a registered security that would trade 24 hours a day, 7 days a week, 365 days a year. And I decided that this is something that there was no way I would not be a part of. And I essentially flew to Tel Aviv or Israel for the first time ever, knocked on the door and said, listen, I need to be a part of this in any way that I can, let me in. And I came on as the chief marketing officer to a company that had spent 950 days working with the SEC. And they spent it because they saw ICOs. These were initial coin offerings, which back in 2017, 2018 were all the rage. You would set up a website, you'd say, invest now. People would send their Bitcoin and Ethereum in there. People raised $25 billion. And they raised it based off of a white paper, a couple of pages that said, we're planning on doing this. Now, at the time, Shai Datik, our CEO, said, look, it's a great idea to raise money, but it's completely illegal. Because there's no KYC, there's no AML, there's nothing that makes these people keep their word. And sure enough, a lot of people walked away with the money. So we went to the SEC and said, I want to do exactly the same thing, but I wanted to do it in a legal, compliant way. They said, no, it's not going to work. And he came back with MWE, a law firm in New York, and Ernst & Young Israel. And they worked for 950 days, and we created the first ever prospectus for a F1 offering for a IPO in the blockchain. And in August 20th, I think it was, of last year, we were declared effective, and 48 hours later, we opened up a website. And in that website, we started raising money from individuals all around the world and institutions. By April, we'd raised $85 million or thereabouts from 7,250 people in 74 countries. And we took that capital that we raised, and we weren't selling equity in our company. Rather, we were selling 40% of our profits, if we ever have any, ad infinitum. And we couldn't print any more tokens against this 40%, so the number of tokens stays the same. But if we have profits in the future, 40% have to automatically be sent to these token holders on a pro rata basis. And this is sort of different because on our balance sheet, it's not a debt, and we didn't sell equity to do this. So it's a new way of raising capital, and the SEC defined it as a new asset class. So super interesting. With the capital, we decided, well, we've got a cryptocurrency trading business that's now active in 26 states in the United States. We have a security token trading business. And what that really means is it's digital assets that we're allowed to raise money for and have trade 24 hours a day, 7 days a week, 365 days a year.
Let me just jump in real quick here and try and give the broader context here. One of the interesting things about this space is we have people at Real Vision who come to us with very sophisticated understandings on the technology side, very sophisticated understandings on the financial slash economic side. I want to really break down some of the concepts that you're talking about here because I think it's so critical to understanding what you guys are doing and why it's important. So let's talk a little bit about the regulated securities space. First of all, let's just start with defining what the regulated securities space is, why it exists the way it does, and why it's important for people who are in traditional financial services and banking to be compliant with that regulation.
Yeah, that's a simple enough question to answer. Now, let me just say though, I'm not licensed in any way. This is not financial advice, Ash. So
Yes.
please, listeners, take notice. It's important that when someone invests in you, that you provide them with information that they know what they're investing in. So they know exactly what they're spending their money on. But it's also important that you, as the company, the issuer, understand who these people are. You can't just accept money from people on the street. You've got to make sure that they follow certain rules or they come within certain boundaries. Now, if you were to do, let's say, a Reg A offering in the United States, that's what's called the mini IPO. You can raise money from anyone in any state in the US as long as they pass through what's called KYC, Know Your Customer, or AML, anti-money laundering. And that means really that you go in every state, someone wants to invest, and you say, well, let me see your driver's license or your passport, or let me see your utility bill, or maybe your last credit card bill. So we know where you live, that you actually live there, that you're a real person, and we know who you are. And I think that that's generally true for anything that you invest in the US and the legacy space too. When you buy Nike stock through Morgan Stanley or E-Trade, you go through an AML KYC check. They say, can you upload your driver's license? Can you show us your utility bill? The usual type of thing. That way, then they know you and you know them. And I think that that's very important in the securities space specifically. Now, why would you do a security as opposed to a utility token? And this is a big discussion right now. I think that SEC Chairman Gensler's got lots of views on this. And there's a lot of companies that say we don't need to be a security if we raise money. But I think that the SEC has a very different view. And the SEC's view is, look, if you're raising money, then it's got to be an exempt security, private security like a Reg D, Reg S, for example. Or it's got to be a public security like a Reg A or a full F1 or S1 prospectus. And so there are rules in this country, if you want to raise money from people, that you create a security. There are other companies, and I think Ripple would be a good example, that feel that their security, that their issuance, even though it was used to perhaps raise money for their company, is not a security. And there's a lot of discussion right now over something called the Howey test in Washington that's trying to decide whether or not utility tokens are securities or utility tokens. But that's a discussion that we could have for hours and hours on end outside of this one.
Yeah, so big picture, for people who are relatively new to this space, you basically have with the registration process for exempt and non-exempt securities, all of these this legislation regulation. It's been around since the 1930s, and two primary purposes: one, to protect investors from fraud, and second, in more recent legislation and regulation, to make sure that people who are investing are who they say they are and are not engaged in money laundering or other illicit activities. That's the big picture for what you're framing here. And I think it's important for our readers, for our viewers to understand that. And now we have this digital asset space that comes up, and you bring up the prologue, which is 2017, the ICO boom. I was covering the ICO boom over at CoinDesk. I remember it very well, where you had almost the exact antithesis of this happening. You had people raising huge amounts of money, sometimes for, projects that were, let's call them dubious, and you didn't have the AML KYC compliance happening. So now we find ourselves in 2021. Those spaces, which in 2017 were completely separate, completely distinct, are now beginning to come together and merge in a way that's starting to look like a hybrid of both, and hopefully with some of the best characteristics of both. Talk a little bit about where INX is right now in that process. I know you mentioned it, but just to make it really crisp, what you guys are doing in terms of that merger, that bringing together of these two disparate spaces.
Well, I think what we call it is the Great Migration. And it's a migration of assets that have traditionally sat in the legacy space that are now going to start migrating over into the digital space. And this is, we spent 950 days with the SEC. After we spent that time, Chairman Clayton at the time went in Philadelphia and he said, you can see all assets moving onto the blockchain. Now, why is that? Well, today, Ash, you could take Nike stock, give it to your friend, their friend could sell it. Nike doesn't know, the government wouldn't know, that could be seen as money laundering. When you use smart contracts and you start using digital securities, ERC 1404 is, I think, the best smart contract out there on the Ethereum blockchain. There's a lot of things that happen that make things different. First of all, money laundering is stamped out because there's whitelisting of wallets. Second of all, unlike when you have Bitcoin in your wallet right now, everyone hears about how their friend lost their seed phrase to their wallet and lost their Bitcoin. Or they lost their Ethereum, or they sent their Ethereum to the wrong wallet address, a Bitcoin address, and they lost it. There's so many crypto horror stories. Now, you can't have horror stories like that for securities. You can't lose your IRA or your 401k or your Nike stock because you sent it to the wrong place. And so we developed, along with TokenSoft, something called the ERC 1404 standard, which means it's a token that can't be lost. If you lose your wallet that you're holding this token on, that's fine. We can revoke from that wallet and reissue it to a new one. If someone was to try to move that token from your wallet, the wallet looks up to the blockchain, says, hold on, the wallet I'm moving to is not whitelisted. I'm not moving. And it refuses to move. It refuses to be stolen or hacked. However, if it was whitelisted, the address it moves to, and it was a theft, well, guess what? We know the name and address for the person that owns that wallet, and we'd be able to provide that to law enforcement. Now, that's tremendous. It doesn't exist in crypto today, and it certainly doesn't exist for legacy equities. So we've sort of taken some things that are the best of both worlds, collapsed them together, and realizing something that people always say that blockchain's looking for a solution, and I think that we've found a solution for equities. And the other problem with equities today, and you probably don't think of it as a problem because you're so used to it, is that equities are open from 9:30 in the morning until 4 o'clock in the afternoon. Now, that might be okay for the guy in New York City, but it's not good for someone in Asia because that's when they're sleeping. And with digital securities, what we've managed to do is we're open 24 hours a day, 7 days a week, 365 days a year. That's more than 5 times more than the New York Stock Exchange or NASDAQ. Think of it this way. We've got folks all around the world that trade on our ATS in their time zone, in their time. And I think that that's rather remarkable. And they don't even have to send over dollars to buy these securities. They could send over Ethereum or Bitcoin. Again, we're taking the foreign exchange risk somewhat out of the equation. So there's a lot of things that we're doing that we think are going to make securities trading so much better. So much better, in fact, that we already have some securities, a number, that have already put out PRs. EV Biologics is a great example. This is a company that decided it doesn't like what's happening on the OTC. It thinks that naked short selling is not right. They decided to delist from the OTC. They're going to drop their ticker symbol, and they're going to list on INEX. And do you know why? Because with a security token, it can't be shorted. So they get rid of the short interest. They think that's going to be good for their shareholders. And I tend to agree in that respect. But, we're offering solutions for folks that are already public companies that these solutions didn't exist before.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.